Many have been waiting, watching, thinking 2025 post-election will be the year that suddenly IPO springs to life and maybe more some M&A. Is that something that you're talking about with clients?
Yeah, well, first off, thank you for having me, Caroline and Ed. That's exactly right. So we are very focused on it. We're very optimistic about it. As you said, there was 7 true tech IPOs last year. They, as a class, have actually traded very well. I think that we've been focused on why are some companies waiting on the sidelines, but when we look at the pipeline and the things that are on our radar in terms of tech IPOs for 2025, if we look at what's on our radar just for the first half of 2025, there's at least 7 tech companies on our radar for that. And I think success begets success. And so if those companies go public and if those are successful, which we expect that to be the case, then we would expect that a lot of the companies that are on the sidelines now will get off the sidelines and we'll start to tap the markets.
Do the risk reward for us, because bigger and bigger private companies are able to raise more and more money at extraordinary valuations. Clearly the money's still coming in from the private side. Why go public?
Yeah, I think that's the exact right question, and I actually think that's the exact question that companies are asking themselves. Generally we see that at some point, regardless of whether or not the private capital is available to them, companies do choose to go public, and they do that for a variety of reasons. You see companies that there's a branding impact, and so whether they're an enterprise company or a consumer company, they think that going public is going to give them a brand and help in terms of accessing more clients and more customers. So you see it for that reason. You oftentimes see it for employee liquidity, for shareholder liquidity, and so at some point as companies mature, it starts to make sense for them to tap the public markets. The other thing, and you know this, but it gives you access to currency for M&A. So as companies start to think about M&A becoming an important portion of their company going forward, that's another reason why we see companies decide that they want to go public.
Emma, let me jump in here on employee liquidity. I feel like companies, particularly at later stages, have options, right? 2 deals that I've reported on recently, Viore, Databricks, doing tenders literally to keep talent happy. I think in the Databricks case, it's an example where the company might even buy back shares themselves. How big a factor is that? I mean, if you're a company that can use a tender as an option to keep staff happy, you don't need the cash, why go public?
I think that's a great question, Ed. I think that's exactly right. I mean, look, the way that we think about it is that you want to give companies lots of options. And so we have a lot of companies that we're working with that are weighing what they can access in the private markets. And that's not all created equal either. And so there's a significant amount of structured equity and structured finance that's coming into the private markets. There's more straightforward equity capital. But all of those things are available to them. And so I actually think that creates a really healthy dynamic in which companies can make the best choice for themselves, and they can optimize for whatever the factors that are most important to them, whether that's shareholders, whether that's, as I said before, branding value, or whether that's valuation or other things. And so the access to those private markets, I actually think, is very helpful in terms of how companies can make decisions for themselves.
Emma, 2025, which country is going to be the hot place to do a listing for tech?
Oh, that is a good question. Look, what I would say is I think that the vast majority of volume, or what I'll say is that a lot of volume comes to the U.S. I think that will continue to be the case. I think it's hard to imagine that that's not the case. All that being said, we're seeing other countries and other exchanges have incredibly successful listings. You're seeing very large companies potentially choose to list in venues outside of the U.S. as well. And so there's a global investor base that can invest across the various exchanges. So I think all of those things are healthy dynamics. And so I think you'll continue to see that.
Barclays, a British bank, I'm sure there's some loyalty to the UK. India has been on fire as well. It's really interesting where people choose to list. Emma, what about the story you tell into listing? When it was the crop of companies that came at the end of 2023 and into 2024, you had to have artificial intelligence, basically, in your story. Is that still going to be the case?
I think that's 100% true. So I think we've seen a massive shift in terms of companies, particularly around, so where I spend most of my time is consumer tech, and particularly around consumer tech, companies have to be talking about AI. This has been true for the last year, it's been true for the last year and a half. I think what's been really interesting is the shift in the way companies are talking about AI. So one of the things that we saw early on is that most consumer tech, most internet companies were talking about AI mostly in the forms of cost savings. So they were talking about call centers or customer service, and how can you create a better customer interaction with less manual touch points. We then started to see a shift where we're seeing companies, particularly the ad-based companies, talk about AI as it relates to advertising. And so, you saw with the earnings season that the ad-based companies did extraordinarily well for the most part. And a lot of what we're hearing around that is that the AI technology around ROI for ad placement has continued to improve and is really driving a lot of that. I think one of the interesting shifts that we're now seeing is we're seeing internet and consumer tech companies talk about AI as it relates to real sort of revenue or consumer UI use cases. And so you're seeing online travel companies talk about discovery and planning of trips instead of just booking them. You're seeing ed tech companies talk about AI tutoring. And so you're seeing cases in which companies are saying, consumers know that they're interacting with AI and they're happy to do that because we're providing a lot of value to them.